Hey everyone, welcome to your daily update for Sol and BTC. Just looking at the charts this morning, might actually get to have a bullish video for the first time in a while, but just remember we are still under key levels. If we don't get back up over 95.234, I think it is for Sol, or back up over 74.466 for BTC, then we are still under those high time frame break levels. We've also already closed quite a few candles under those, so they by now are very likely to be resistance. But on saying that, they're also very likely to be the target for a retest. So, we'll see how it goes. The liquidity is starting to build up to the downside on the 1 day. It's actually now more to the downside than the upside on the 1 day. It would suggest to me that weekend pump actions in play. 7 day, same thing. And if we have a look at 30 day, it's probably to the upside. Yeah, 30 days actually starting to even out a bit on Sol there, but overall you'd say 30 days still to the upside, and of course all the bigger stuff is just going to look heavily to the upside. So as far as the liquidity is saying, yeah, we could go up. It's really more so about the structure and how we close today. There's a lot of closes today, and some of them are looking all right. There's a couple of new shorts that are going to be introduced, but they would trigger from those areas around that 74 or up. There is even the possibility that we get a 3-day engulfment today, which is quite big for BTC. So with every single major rally that's come about, whether it's been a new local low and then up to some new kind of high, or even just sort of the recovery from a pullback, they've all been based around things like 3-day origins and then 3-day engulfment. So we have hit a 3-day origin, and if we do get a decent 3-day close today, then we might get an engulfment, and if we do get an engulfment, then we can get a range, and if we get a range, we may travel up. The range off that 3-day doesn't look like it would be an all-time high. Obviously things can develop, things can change. It really just depends on if price stays up, but certainly it's showing that we've got that ability to have a bit of a rally. So yeah, let's have a look at these charts and see what they have to say. Okay, so looking at Sol BTC. So we've come over the trend. It looks like we're going to do a trend break today. We were just touching it on that prior candle there, so that does mean that once we do the trend break, we could take a dump all the way back down to do a retest of it. It's never actually good to be sort of breaking quite steep trends like this and then moving sideways at the same time. So, but overall, what do you get when you get a trend break, particularly one like this? Like if we do close up over the break level here as well, which just scroll this across. So we've got this break level sitting here at 12425. So if we do end up closing up over the break level and breaking the trend, we may have a little pullback into testing the break level and then travel up to the range trend and start testing some of these broken untested levels. So broken, still untested, and we've got a bunch of those to the upside that we might start cycling through. Now, if it's going to be just a bit of a trappy pump, then the first major resistance is just going to be the prior broken trend or the range trend there, which is sitting at about that 12838 area. So we could just hit that and then come back down again. It is a pretty good setup for a trap, just given we've come through the local range trend from the wrong side. The candle's not opened above the break level; it's come from the underside. We've traveled left from the trend that we're about to break. There's no hold level here because we never actually engulfed that blue candle, and we've got 1, 2, 3 here. Versus 1, 2 here, so it is a good sort of little setup for a trap, but that's all rallies really are, is going up before going down some more. So we'll see. Looking at the weekly, it looks a little bit more positive. It can actually get back inside this origin here. So, you know, that's tomorrow's close this would be, but 12780. If we can close the week over 12780, that would give it a bit more of a reason to push up. And we have broken that that support range trend, which dates back to March 2025 with the prior week's candle, and we haven't done the retest yet. So, you know, that's good reason to come up here and maybe get to the 134, 13580 sort of area. Assuming we can close up in the origin back up inside the range level. So yeah, we'll see how that keeps going. So if we do keep pumping through tomorrow and Sol BTC ends up in this 12752 or higher area above the range level and above the origin, then yeah, next stop, expect it to come up and look to hit the trend, or maybe just even that break level there, which has been hard closed as well. So that 13476 hard closed break level not retested yet. So there's good reasons for this to go up, but it is still a downtrend. You just don't expect all-time high from here. Okay, let's have a look at the safety assets. Okay, so this is a pretty bullish pullback for the safety assets, but again, doing it from a position where it could be quite trappy. Like we've pushed through the break level, we've pushed through the range trend. I would look at this and think that maybe what it's trying to do is actually just come back into a retest of this range trend that's really steep and coming down here. And you know, if we were to close this candle here in the next couple of hours, so anything below that break trend and range trend, so let's say best position for a close is anything sub 69.82%. If we do that, then you'd expect it to end up coming down. I say end up because it may push up into the resistance first, but then if it gets some kind of first touch rejection of anything up here, then coming down to the trend around 69.28 or the origin support down here at 69.12, that would all make quite a bit of sense. And if it does just keep on traveling, like closing under these levels and opening the next candle, so that would then start to give you a bit more of a bullish look. It's not really a bullish look if you dive like this and you've come from the wrong side. It's more of a bullish look if it just hovers just on the trend enough to actually just open on the wrong side, and then it only has this minor move to the upside, and then it usually does a rejection from it. So when you see that sort of behavior, you could possibly look to get a bit more bullish. But yeah, at this stage, it's good. It's going down. We may see a bit more upside, and we've got levels down here that have been broken and may just be in line for retests, and it all makes perfect sense if it wants to come and retest these 68 levels along with the trend. So just keep watching that, see what the weekly looks like. And so the weekly accumulation range has played out entirely. It's ended up closing and opening the week under that level 3, and it's pushing back down off it. So there's a bit more confluence for it to come down here to 69.39 or 69.05 just to do a retest of this hard closed area. But of course, if the week ends up closing under that and on the wrong side of that trend, then it's likely just to keep pushing down. And you've also got a bit of confluence there with the retest of that range trend that's running through there. So if it does, actually that's not a range trend, that's a prior broken trend. So if it does a retest of the prior broken trend, then that basically is a full weekly reversal of this whole thing. And you might also get an engulfment. So we may be seeing, because this is quite high up, for the safety assets, we're getting really close to, the top of previous cycle highs, which was, up in here, 71 to 74 sort of area was all the resistance from the previous cycle high. And we did just roughly hit that 71 point something. So we might be seeing that reversal. So if we do keep pumping, and risk assets keep going up for the next day, and this thing ends up closing down, then bullish video, yay! Right, let's have a look at the totals. Okay, so all we're really looking for here, minimum would be a close over this 2.09 level, which is from the engulfment we got a couple days ago, and yesterday when it closed above this area. And then that would, after that, it's going to want to try and hit the break, and if it can get over the break, it's going to want to continue up to that 2.19, so that would be the next range level. It's going to be a break of the downtrend today as well, so we'll be looking at a shift of trend. And at this stage, the new candle is capable of opening over the top side of the trend. So the opposite of what we just said about how the safety assets would potentially grind down. If this is to just hover around here, open on the top side of the trend, on the top side of the range level, so anything sort of over that 209 area, then we may just have a pullback into the trend and bounce off the trend to target the break. And then if it can close over the break tomorrow and just keep on working its way up, it's reasonable confluence with the levels touching or going inside the hold there. It's not the best looking range confluence, but it's not bad. And yeah, if it was to say have a bit of a bearish close, because now that it's hit this 2.09, that's kind of like the minimum obligation of range creation. If it pulls back just under that in sort of the last half hour of the day or hour of the day or whatever, then it could just reject off the backside of that and then travel back down. And yeah, that's at this stage not looking too bad. Okay, let's just check out that weekly. Just skipping ahead to the weekly. So the weekly is pushing up against the hold, so it's got to get out of that hold. If it gets out of that hold, then that's bullish. Getting back above the break. So it's all basically this 2.09, 2.1, all in this area. Now, a really bullish close, of course, is a full engulfment of the previous week. That would be pretty weird unless we got some huge pump back up over 2.37 tomorrow. But it's not kind of what I would expect. We may get up here because it would just be doing things like retesting the prior broken range trends. If we close over 2.09, we may just move between the range levels. We may just come back up and reject off the backside of the trend or the origin here at 2.23. There's a whole lot of reasons why the price would actually travel up there, but it's kind of how it travels up that makes it strong or weak. So if you look back here at this base on the weekly, we never really did these engulfments properly. And so when the candle just came through here, it was able just to keep on coming through because there was not really any weekly support down here. And then, once we hit the trend, it bounced off the trend, rejected off the range level, and just kept on coming back down. And even this hold that was down here had sort of been tested already by this, which made it go up. So we needed lower support. But for today, we'll see if we can close over 2.09. And then tomorrow, if we can close over 2.1, anything like that would start to add a bit more fuel to the fire of reversal. So let's have a look at risk. Yeah, so risk's already, so excluding BTC market cap, has already hit the break levels. And so we just want to see that this closes ideally over the top of, actually that's an origin even, so you could get a decent flow back. Yeah, you get a decent flow back into risk assets if we can close over the 695 billion area. Anything up over that would be good. Anything below that, on the wrong side of the support trend, still under the resistance trend. Yeah, anything below that might just give you another push up, almost like a double top, and then a pullback. And again, very, very trappy structure. Just no proper engulfments here or here. It's come through from the wrong side of all of that. So pretty important to get a close over 695.74 billion to really be coming up above that resistance. And the weekly, yeah. If you don't get the close today on the daily, you may be able to get it tomorrow on the weekly. But same sort of thing. 695.4, 699.51, 704. There's a lot of resistance here. So you really want to see a bit of a pump in altcoins tomorrow to get over some of these levels. Otherwise, closing another week under them is not ideal. All right, let's have a look at Sol. I mean, the 15-minute chart looks bullish on Sol there. We've just had another engulfment. We've opened a candle on the top side of the range trend. So we do have all of this cluster of resistance here at about 88 to get through, but it's first impression, pretty bullish looking price action as we head into close. So let's see if the old computer wants to play ball. The fans are just going crazy, and there we go, spinning wheel of froze. Okay, let's see. Time to pause and wait for this thing to recover. Oh no, there it goes. Okay, so on the 1 hour there, you can see we're really at the top of the range. So this whole 88 to 89.7 is actually quite an important area, which we haven't done a test of since we did one of the high time frame closes the other day. So it would be good to see it get over 89.7 and start closing candles up there to keep on moving through the range. But yeah, we're definitely at the very, very top. If you are opening along here, you're opening along into all the resistance, which is not ideal. But if you're in one from earlier, then you're doing all right. So, okay. Looking at the daily. Just noticed I've got my daily time frame on my 4-hour chart. Let's fix that. Okay, so that's the daily range there. But this is now a 4-hour chart. So 4-hour chart, just looking at that, same thing. We're really just at the top. And if we get a hard close today on the 4-hour candle, yellow hard close, we would actually be hard closing an origin level on the 4 hours. So that's pretty bullish. If this was to close up with no wick and be above the break and above the origin and hard closing the origin, then that would certainly give it a bit of a push. But to be more bullish, we really want to start getting up over that 89.127 there. It means we're really breaking out of that entire range. And yeah, it's looking all right. Okay. And we may end up closing up inside the hold level from back on the 7th of Feb. So let's see what we've got going on here. We've got the full range and engulfment that was created off the origin. So this is your break level gets hit, gets converted to an origin. It actually closed underneath it, but then reversed and came back the other way. So that's quite bullish when it does that. Does that full engulfment, closes, and now we're looking at if we can get over this break, which is 89. And if we can get over the break of 89, then we're looking at 91 and then 97 and then 102 if it goes all the way to the top. So that's not, yeah, that's not bearish, but not perfect. So it's going to be a break of the downtrend. So certainly the 89 could be that first resistance. If it was to close here, it's kind of hovering just below the daily break, and we may break the trend and then just travel into the daily break, reject off that. So it would, yeah, like I say, it'd be better to actually see a close over that 89 area today, but still this is at least breaking downtrends. And it's got quite a steep range trend there to retest as well, which adds a bit of confluence to heading all the way to the top of that range. Okay, the weekly, let's see what the weekly's up to. The weekly's recovered the trend, so that's pretty good. And then it's obviously got the horizontal resistance up there. So 93 to 95 retest areas. Makes a bit of sense that it does those retests. And that's kind of what we've been looking at anyway from the high time frame charts, is at some point coming back up and running into this whole 93, 95 area. Even if that is it, maybe it just rejects from there, breaks the trend and just keeps on traveling down. But yeah, the weekly is starting to show some decent signs. As long as it can stay where it is, it will be closing back up inside the trend, and then usually that will give continuation onto the next horizontal resistance. Okay, now let's look at some of these bigger ones. Okay, so 3-day today, we're looking to see if we get a close over 88.6. That would be a range engulfment, and then the first level would be 95.274, which just makes so much sense with going up and doing that high time frame retest. So that's 3-day. We're going to be opening over the top side of the trend. Even if we don't quite get a proper range close, any kind of close over open, so anything over that 86.911 is still creating a hold level. So yeah, ideally, like I say, over 88.65, but yeah, anything over 86.911 would still be quite good. We've got a 7-day close today, so let's see if we can find that. Oops. Okay, so 7-day, same sort of numbers, 88.183 would be all we really need to see there, and that means we're just creeping back up inside the level 4 of the distribution range. So we've obviously the higher the better. First resistance would be there, that retest of that break level at 95.234. So there's a lot of confluence here with it looking like they want to push up and do the retests of these higher levels. So the only way this could get a little bearish would be if they do close under 88.183, then the level 4 of the distribution and the top side of the trend could become the actual move, which means, you know, pulling back to sort of 82 again. So yeah, close up over the 88.183 would be definitely bullish intent, and then if that happens and it starts to, or it does just keep on pumping, then look for taking profits around 95. Okay, 9-day. Yeah, anything over 86 is fine for the 9-day. And first resistance is pretty much at 100. So that's looking pretty reasonable. Yep. Okay. And 11. So the 11-day really needs to get back up over 92. So this is possibly a bit more bearish. However, the bigger range, so this 92 level is kind of like a smaller range inside of an older, bigger range. And the bigger range is actually going to want to come all the way back to 114. The smaller range is going to want to have resistance at 92. So, and then of course you've got 93 and 95. So all those various levels, break levels will show up there. So if you're looking to take progressive TPs on the way up, you'd probably be looking at 92, 93, 95. And then if it ends up in the next 11 days actually continuing up, then it's going to be engulfing an 11-day candle if it closes up higher. And then you can start to look at some of these bigger numbers for retests. At 21. Okay, and the 21 days nicely back up inside, and this is kind of what we're starting to see some of these bigger time frames actually looking a bit more positive. So it started with the 8-week recently, last week. So it looks like we might be any close over 79 is back inside the break. Next break level being that 95 level along with everything else. But also just very subtly, anything above 87, if we go all the way back to 2021, 2022, sort of timelines, anything above 86.647 is actually inside of a reverse hold. So that's pretty good old support there. So if we can stay above those levels, then yeah, next minimum resistance is once again that 95 retests. It's a bit different today. Struggling to find something bearish, right? There is actually, just from a pure data perspective, there has been a heap of new longs pop up for Sol as well. So definitely a lot of new support appearing. Okay, so same thing here. We're just pulling back to the break level from the looks of it on the 33-day, which is that same 95 level. And we may be, looks like there's so many ranges actually on the 33-day. Just pause this and draw them out. Okay, so any kind of close below 89.353 could flip bearish, just because we could just reject and then start heading on down to 26 bucks. But if it does close back up over that today, then it could start to look to push up as high as 152. There would be, this interior range. So there's basically just ranges inside ranges inside ranges on this time frame. And if we sort of try to narrow it down a bit, we never got 2 candles here, and there would have been some lower time frame break levels all hit up in here. So probably could look to take that one out. So that's that 92.3 level. Now the next one, same thing. So if we sort of just delete the ranges that may have been broken, then we're left with these two. And yeah, so that sort of shows that 89.343 level is pretty important. If we close under that level and then just go on a bit of a run to the upside, then I'd just say that that's a trap, and then at some point we're going to be heading back down. But if it does sneak back above that level and close above that level, then really you've just got your break level here at 95. You've got your origin retest, which is up there at 120. You've got this small range that's going to try and develop, which could mean 99 and 116, a resistance. And then you may bounce all the way back up to 152 just to actually do a retest of the other side of the range bracket, because it never actually retested it. It closed underneath and it rejected the break level rather than actually going up to that 152. So we ended up rejecting this at 144. So yeah, be interesting to see how that closes. On one hand, like we say, $26, bit more confirmation of more downside. On the other side, if we close above 89.343, we may actually be reversing and looking to go back up. So cool. That's that one. And we'll have a quick look at some of the bigger stuff. So 63-day is just closing under that 95.2 break level again. So just 95.234. So I wouldn't take that level lightly if it comes back there, because there's a lot of big stuff that's being closed under at the moment. So that's that one. 67-day, same thing, but 67-day also has an origin at 109. It's got a range hold that looks like it's reversed, which is supporting it from 75. So yeah, 70 going up and hitting that 95 area makes a lot of sense. If we do get to 109, then that could also be another target for rejection. And I guess the hopium there is that there's a bit more confluence there with a revisit of the 150s as well, but it has to really close inside that 95 plus area if you want to see price moving back up into the 150s. Okay. $77. What do we got on the 77? We've got 109 is the origin there. 115 is the really old 2021 range. And 144 is the level it's rejected from. So if let's check out what this is up to. So we have 144.7 and we have 244. Okay. Yeah, so this is failed distribution. So not closing underneath that 83.333 definitely can invoke a move to the upside, which of course could be 109 or this break level here, which is 123.436. So that looks like we could be seeing some kind of reversal. And so there's also an older range here where we never really went back up above the distribution on it. We've also got that 242 origin. So this actually does look like origin creation, rejection from origin, engulfment to the downside for distribution, failed to get below the 1618. So that actually could be signs of a reversal. But to be really sure, you'd want to see it close back up over, just make sure I got this one right. 167, nope, so 168.368. Yeah, you really, so here we go, it's that 89.713 level. So if there's going to be some kind of early rejection, it could just come from that. And that's a, that could be a pretty nasty one. So yeah, close today over 89.713, please. That would be good, and it would show definitely a less trappy move to the upside, but still 109.123. If we see those numbers, then it's worth taking profits off the table if it gets there. Right, what else? We've got a 99-day. Not really much going on there. No engulfments. It's probably bouncing off the top of whatever this range was down here. Oh yeah. So you may get a bounce, 85 up to 106 over a long period of time, obviously, because it's 99-day. 201s. No engulfment to the downside. Nothing really to see there. It's just inside the really older range from back here. Let's see where it's at. 38.748. Yeah, so it's just hovering around that pivot level there. So things like this, like closes over this 88.717 are quite important. If we close over that, you could look to head all the way back up to 119, or even just all the way back up to the top of the range again is entirely possible. But closing under that normally means that whatever pump goes to the upside just ends up coming back down. Next level's that 57 level down there, then 38, then the entry of the hold. So it looks like it's a pretty important day to be closing 70 cents higher than where we are now. Okay. But of course, also just bear in mind 200-day time frame. So this is the kind of thing that can take you to the bear market bottom, because that's about the right timing, 200 to 300 days from now. If we are down in this lower area here somewhere, then all it is just confirmation that today we start at this 88.7 and we reject eventually, maybe up first to get some liquidity and then down. But yeah, if we do close over that, then it can be seen as a bit more bullish. Okay. And not really much to look at there. And the really big stuff we can't look at on TradingView, so things like the 469 and the 603 and the 693 and 737. So we'll just have a quick look, see if we've got anything validating today. Okay, so validation. basically means closing structure. 15th. All right. So we've got the possibility of that 3-day long, which we know about, as long as we're over key levels. So that's that 86,911 at a minimum. And to engulf the wick, 88.65. Then we have a 33-day short that's forming. And it's already inside of it. So yeah, looking at this, the range levels are 99 and 72. So if it was to create this short, it could pump up to as high as 99, reject off that 1618, and then come all the way back down to 72 is just a step in the ladder, maybe a downwards ladder. So that's all that we're getting as far as validation today. And if we look at the overall balance, so these are ones where we have exited the hold. So this was looking quite bearish at one point on Sol, and then it started to look a little bit more neutral. So if we look at incomplete moves, then it's definitely, so we've got 27 there, and we've still got these 5 key shorts, which these really just can't get invalidated unless the price gets all the way back up inside 95, 109, and really to break them it has to close up, you know, above that sort of 144, 139 area. But we're starting to see more longs popping in. 128. So there's nothing massive in here, but you know, 128 through to 137 looks like it's the highest. Yeah, 128 to 137. So starting to see the balance more shifting towards the longs. So if we can keep getting some decent closes, ones like this one as an example here, which gives you a 137 target, it really has to stay up above the 87.711 for another 10 days. And if it does that, it'll actually be closing a candle outside of the hold, in which case it typically is going to want to travel off to 137. So, and unfortunately, a lot of these others just, they're so big, they're so far out that we could go through to a bear market bottom and then come all the way back up again before any of these really are super valid or bullish. But okay, let's have a look at a bit of a look at BTC. Well, the 1H is sitting on an origin. So in 24 minutes, if it hard closes this, then it's a break of trend and it's a hard close of an origin and could have another go at pushing up. So it's not a bad look heading into close. And 4H, not great. So just kind of pushing up into all the resistances. If the 1H origin gives this thing a good kick and sends it up though, then the 4H close could be in a good spot. So that's not too bad. Daily trend break if it closes yellow. So if they're going to dump it, they're going to have to dump it pretty soon. And then that should try to target the break level if it breaks that trend. The wick on the candle is not super short, but if we see how it'll look, but it will be opening over the top side of the trend if it stays like that. So as long as it stays over 69.5 69.3 area and closes yellow, then it'll be over top of the trend. We've got the range engulfment that was created yesterday. So it has already hit that 1618 level, so that 70,444 has had the test. So yeah, if the most, like a really bullish close for this on the daily would be if it closes over that 70,444 level, because then it's breaking through trend, it's got above a range level. I mean, the break level could then reject it, and maybe it's game over and we go back down. But I always say you should take profits at break levels because you never know which one's going to reverse and become an origin. But yeah, it's not a bad close where it is. And let's have a look at the weekly coming tomorrow. Yeah, and the weekly at this stage is back up inside that level 3. So it's bounced off a break. Actually, it's an origin, in range origin. So it's bounced off an origin. And it's not an awesome weekly close because unless it engulfs that 79k tomorrow. I mean, if this was to do some huge pump tomorrow and engulf that prior candle, then that's a game changer for BTC. But if it doesn't, then we could be looking at either a hard close or the start of a hard close below the 74466 level. But yeah, these two weekly levels that are above here, it's going to be pretty critical if that candle is blue or yellow tomorrow, because blue would be a distribution hard close of the weekly 474 466 level, as well as a hard close of the origin at 76. Normal sort of range move could push anything back up to that sort of 76 area just on the weekly there. And of course, a bearish kind of move would just be a rejection straight at the 74 and then back down again. Or more bearish would be it just goes down tomorrow anyway and closes below these levels. So definitely some pretty key levels to watch there tomorrow. Okay, let's have a look at the bigger stuff. So yeah, the 3-day close needs to be over 71,401.3 to do an engulfment. So it's not looking quite as strong as what Sol actually is, but still good close, trend break, opening over the top side of the new trend if it closes yellow at this sort of level. Basic engulfment if it closes above 70,291. And like I say, range if it closes above 71,401. So yeah, not a bad looking close. They really would have to dump the heck out of it in the next hour and 20 minutes if they want that to get bad. So right, what was that next one? 7-day. So 7 days just pushing into resistance. Yeah, so it's kind of just under a break level, which is 70,164. So would be good if it pushed up a bit more. 9-day. So 9 days completed its full distribution all the way down to level 4, and it's well and truly back up inside the break level. And as long as it stays over 69.649, then it's just confluence to push up and do the retests and start reversing through the range. So that's probably a good level to watch. 69.649, and we're sitting just above that at the moment. And 11-day, if it closes up inside 69,746, then that's getting back up inside a range level. So there's an origin up there at 76.5k, so that could be a pretty valid target. Hasn't quite escaped the break level though from 2024. So yeah, it would be good to see that close up over those break levels, which means 70,164 or 70,063, just to sort of get back out of this area down here. And there's possible resistance there at about 72.8 as well. It looks like, yeah, and at the price it's at now, it's still just under the trend, so that's also not ideal, but it's a little bit higher up before close would be good. Okay. Okay, so looking at the 21-day, closing under that 74,466 break level. And unfortunately, we're sort of, that 72 area, even just kind of just where it's at now, you can see it's just toying with the top of this older break, which is 70,063. So you really just want to see that thing close up over 70,063 so that you know it's out of this break area here. And then unfortunately you got another two, which 72 and 72.8. So it may not be smooth sailing up from here, but definitely we want to see a close in the 70,000s today, preferably over $70,063. Okay, so we got 33. I mean, bigger picture wise, we did have an 8-week close over 70,063. So just there's so much in the data that's just pointing up at the moment on BTC. I think a lot of these little smaller resistances along the way probably aren't going to stop it from traveling up, at least to do these retests anyway. Let's have a look at this 33-day. Yeah, so 33-day under the break level. I guess that's the moral of the story at the moment is we're still under the break level, which always puts a bit of a risk on any kind of long, because if it was to rally up and hit that, then it may just reject off that and travel down. But yeah, this is pretty much just telling us the same thing. Bouncing off an old trend and heading on up. Let's see, 63-day. It's a pretty important day. Things like getting out of this hold. So what's the top of that hold? 70,063. So there's that magic number again. Just getting out the top of that hold is what you want to be seeing. And then first resistance would be the break level that it's under. We've still got a minimum obligation long to kick in here. So if we can get out of this candle, so normally what I would do on these types of scenarios where you've got a fully engulfed candle is I'd look at what the minimum move is which is going to be your open price. So that's this. So minimum move, 79. Have we got a trend, a downtrend in play? No, we don't, because it's just been blue, blue, blue from the yellow. Do we have a break level that we're under? Yes, we do, which is that one, which is your 74,466. Did we hit the break level of this range? No, we didn't, because that was a bit lower than the price went. So break level there was 58,902.7. And are we out of the hold? We're out of the body of the hold. But if we do close over 70,063.6 today, then we're out of the wick as well. So that means we're completely out of the range hold. And then you can put another fib on here. So just, which is your full range. So 70,063.6 and 48,946.6. And then that has a target of 83. Okay, so then what we're really wanting to see is we're wanting to see that we close out of this hold today. And if we do, you could look for TPs around the 74 break level, 79 and 83 over a reasonable period of time. So about 50% of these hold level trades will play out within the same time frame. So like 63 days, it should play out over the next 63 days, and the other 50% take longer. So it's the common question everyone asks is how long. It's like, well, there's a 50-50 chance that it will play out within the time frame, and that it won't. So you don't really have an answer for that one. That's statistically anything other than 50-50. That's but we know where we want to close today if we want this to be highly probable. That's over $70,063. All right, let's have a look. What was that? 63 day. That's 67. So same thing. Levels are pretty much going to be the same. Same thing. Levels are pretty much going to be the same. Break level's a bit higher here though. So we're looking at an 83 break level on the 77 day. It's pretty confluent with that range target. But needs to be slightly higher, so it needs to get above 70,164 to be outside of that candle entirely today. Yeah, there's not as much to look at there on structurally. Still below a break level around 72. Still inside the candle unless we get over 70,063. And may have already completed the minimum move for this one. It looks like it's because the body of the candle is much lower down. So roughly, yeah, 71. Pretty sure we bounce back to 71 after we hit that. I think that move's already played out. Okay. What do we do next? Yeah, it's just really just confirming that there could be resistance around 74,466 on the 201. And same thing on the 231. This is relatively bullish though, looking at this. Just showing that we've actually done that break retest now and that the candle is closing up out of it. So that's quite bullish. That's as far as we can see on there. So let's have a bit of a look at what's confirming today. Okay, where are we? Validations. Okay, so you got two shorts looking to confirm today. Surprise, surprise, the wick for so full engulfment, so they can both create ranges. And the levels would be between 74,466 and 44k, and 74,466 and 51k. So just good reason to keep traveling up, but also just a bit more reason to be careful around that 74 level as far as opening up longs. And if the world's super bullish, if every influencer out there is telling you that we're going to the moon, and it happens that we're about to hit 74.466, 74,466.4, then yeah, don't get suckered. And of course, if we close over that today through some magic pump, then that's invalidation of these being able to create ranges, in which case you might be seeing some real decent bullish reversal signs. This one in particular is quite a nasty candle. This 76k area, minimum obligation short. The probability of that playing out is really, really high. So yeah, if we travel back up into 76, then coming back down to a minimum target of 54 is very high probable. So that's what we've got confirming today. And as far as longs that and shorts that we are in or out of the holds that are incomplete. So this has jumped up from 66 to 104, which I mentioned right at the start of the video, and it's almost entirely longs, which is very different from last bear market. So 103 longs where we have entered, exited the hold, and of those we've got closures happening pretty soon. So that's the next 10 days worth of closures. So even just in a day, we have these three, where if we close outside of those, then we have 79, 73, and 81 coming in as high probability targets. And if we look at the shorts, we've got one really big short left, which is down to that 56. So if we build a couple more shorts today and we push up into those shorts over the next coming days, weeks, however long, and we just start to complete some longs as we do that, and the whole balance of longs versus shorts starts to become neutral, then we may, as we get closer to the time frames rolling over, start moving down to these targets. So it's everything sort of screams that we should be going up for a little bit, and the structure is starting to look a little bit more positive. on the lower time frames. And we definitely have a large range of movements. So if we forget about the one short there, 72.719 through to 99k. And as we push up into those, we will run into shorts that are waiting for us. So there'll be all of these. So what have we got sitting above us? So we've got 260 short triggers sitting above us that we haven't entered. And the price range, actually, sorry, let's make sure we've get rid of the ones from 2027 and a year from now, because don't need to think about those. So they've got to be validated shorts, closed shorts, not just potential structure. Okay, so we'll include tomorrow. Okay, so we've got 124 that are validated, and we haven't entered them yet. And they sort of started about 76.675, and of course travel all the way through to about 120. Doesn't mean we go to 120, everyone, but it does mean that once you get into that 76 level, you're running into new shorts that get added into the list as far as having a minimum obligation. And the other one is to look at things like fully engulfed structure, where we're sitting inside the minimum range bracket, but have not tested the pivot, which is these ones. So we've got 73k there, so a little bit earlier than that 74, but most of these are, well, they're 73 through to about 81. So that's where we're sitting at. Right, let's have a quick look at some of this other stuff. Actually, why bother? It's a weekend. Nothing has changed. Okay, right, that's it for today. Bit of a long video there. Wasn't overly prepared, sorry. So just went through some of that on the fly. But overall, it's, if we can get a decent close today, just a little bit further up on where we are now, then yeah, we could actually start to see those higher levels getting retested. And for me, that just makes so much more sense, because if you didn't even have a chart to look at, if you didn't have social media, if you didn't have any of that kind of stuff, just quite literally the balance of longs to shorts is so far out of whack. And back in the old days, yeah, old days, a couple of years ago, when I was just doing low time frame back testing, every time you got out of whack like that, the price would just move in the other direction, because markets need balance. Like for every short, for every buy, they want to sell. For every time that the price is pushed down, they want to basically push it back up. The levels are not always as big, you know, so the whole push it down $2, bring it back $1, that's a downtrend. Push it up, you know, $2, push it back down $1, that's an uptrend. But the thing is, the price is always moving up and down. And so for the structure to be so completely one-sided right now, it just doesn't make sense. And just kind of waiting for the price to go up, really. And it does definitely look like it should go up before it goes down to a new low. But yeah, it's still a downtrend. So, you know, we haven't really seen a typical bear market bottoming yet, where there's normally way more time and accumulation if you get to the bottom in a bear market. So it's just going to spend a long time down there and get everybody thinking it's completely over, and you know, that sort of stuff, before it moves again. And we haven't really seen that. So it's yeah, we'll see how we go, but we might get a bit of a rally, which will be cool, and can tick some boxes and some longs. And if you're in some spot, you could potentially, you know, if you're not entirely convinced anymore you should be holding it, then if the price starts to go back up, you could look to get out of it. So we'll catch you again on the next one.